with fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Alright, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. And it's only been 14 hours or so since we last updated you, the daily candle close. Basically, we're back where we started, but we did get that little bounce projection to the upside, and we got some nuke flash on our indicator right at our projected thing, which we'll go over in a moment. But as it stands, to recap here, we closed above the cloud on the Momentum Master indicator, and we are holding as of this moment the trend-based bearish fib extension level of the one level. We have reclaimed that on a move to the upside. Is this a shoulder, head, and possible shoulder if we come up to the top of this range here and then finally retrace at the rejection of this diagonal pitch fan of the 0.5 level and then come back down in the future on Thursday, Friday? This could be a potential setup in the making. Are we going to continue this move is the question. If we take this simple regression trend and do 2 clicks here, you can see we're at the top of this channel on the Coinbase chart. Let's go into high block capital. What is high block capital? Well, it's when people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait. And so since we went live this morning, basically we had a push up here, grabbing the pool that we outlined on the external pool, like the conservative external pool that we were talking about, and those guys up in this region, the $152 million up here, got burnt to a crisp at the 50x pool of 152 million. Fatality. What? My thing didn't work for whatever reason. That's weird. Interesting enough. So as it looks right now, we are heading to the let's go to the external pool as we take a look. I think wait a minute, hold up just a second. Did the wave link not load? That's weird. Sorry, is this actually loaded properly? Hold on one second here. It didn't load my settings. I hope my voice sounds all right. Either way, we're going to go into the external liquidity zone here on the external liquidity pool here. I'll troubleshoot this later. That's weird that it didn't load my sound effects for whatever reason. So if we go to the 7-day time frame, we always skip the 12-hour. On the 7-day time frame, we do have this hot pool, crispy hot, up at 27,350 that we have yet to purge. This is a conservative thing on the 7-day time frame. There is an imbalance up in this region that we could see reconciled on this 7-day time frame. Are we doing the stop loss hunt before we go up is the question. On the 7-day time frame, there is that clear imbalance calling for that 27,350 region. Once again, you have about $4 billion up there in short liquidity at 27,350 and $3 billion at 27,400, $3 billion at 27,450. So a good $10 billion up on the way to 27,500. If we expand our vision to the monthly time frame and we start to juxtapose the external pool that lies in wait there, we do see that imbalance of $19 billion at 28,100. And the entire path there caked up with double-digit 10 billion, 10 billion, 10 billion, 10 billion here and there on the way up there. So a good 10, 20, 30, 40, 50, 60, 70, 80, 120 billion on the way to 28.1 or 28.2 rather. So if we head up into that region, does that mean after we reach that point, do we start to retrace down into the external pools below? That's when you got to expand your vision to the 3-month and the 6-month. And as you start to do that, you start to notice, previously we had this divergence that we were looking to spawn by grabbing some of the liquidity to the downside. We got 150 plus billion here, spawned a little bit of the divergence just to rise up to only come back down and gobble up 200 billion, another 100 billion more. So that is 250 billion plus that we gobbled up here. Could we come down into these $150 billion more? That is highly possible. However, you're also starting to get a nice juicy pool start to form on its path to the upside here to 34K. This entire region used to not be hot at all, and now it's starting to get yellow. So the opposite case was occurring here, which was why we started to look for the shorts on the bearish trend-based fib extension level. So are we going to start to see this gobble up here? That is the question. Or are we going to make one more stab down into this region? On the 3-month time frame, it's starting to look ambiguously tilted towards the upside here on the 3-month as well. If you start to shift to the 6-month, that's where you start to still see the imbalance lurking to the downside, and you see this 100 billion, 200 billion dollars down here on the 24.6 and 24.3 region. It starts to taper ever so slightly, 24K even and $23.60 billion, and 113 down at 22.5. So are you going to see this stab to the 24K region again on the 6-month time frame? It does suggest so. So this is where you start to see the imbalance to the downside appear on the 6-month external liquidity pool. The yearly time frame we skipped because we lost the range from July, so we're going to use the 2-year time frame, and this is where you start to see the external range in its full glory, and you start to see this 159 billion up at 32.4 and 100 billion pools up in the 32.8 region and nearing 100 billion at 32. So the marionette strings of the shorts are pulling to the upside possibly, and you're starting to see the same pools here as it starts to seem ambiguous to which side it wants to go on the largest pool there is, the external 2-year time frame. So you have this $159 billion at 24.4 versus the larger pools pulling above. If you go up even to grab some of these pools at a conservative level at the 28.1 or 2 region, at least you knock out some $40 billion before you start to make that stab to the downside. So you go up to go down, you go down to go up. It is a stop loss hunt either way you go, and either way you look at it, it looks like we are starting to see a little bit of a stab to the downside. Let's go to the Binance chart where we have our fibs drawn, and we'll take a look at that. Shout out to everyone here. Let's see. You can hear me well. Great. That's great. All right, well, I'll figure out the thing. I got a wavelength update thing that I said no to, and so it looks like it messed up my my effects or whatever that I had toggled for my script on Stream Deck, which is irritating. See, if I turn it on, it says no. Where is the wavelength? It's weird. Configure wavelength. Let's see. It should have my... I paid for these, so it should... Hello? There we go. Hello? Test. We'll figure it out later. Alright. Oh. Alright, so on the daily time frame, well, let's... I think we can keep the fib levels up for now. This bearish trend-based fib level we got from doing this impulse retrace to the downside here, and that gives us that idea. And if we do the impulse retrace idea here, this gives us the 236, which we were unable to hold on the bullish level. So if we take this impulse all the way down to the downside here, then we can see a new level for a bullish, a daily time frame retrace, impulse retrace idea for a 236. So unless we can get above the 29.235 region, any levels we hit is basically a stab at the short liquidity before coming lower into these pools. Let's start to take a look at our oscillators. What are the oscillators? Well, link is in the description if you're unfamiliar. It's momentummaster.info for more. You can scroll down to features and toggle everything as toggle switch, or you can kind of look at each component and read about it as we go over it. So on the daily time frame, we were looking at the preemption of this upside before it started to occur, as we were starting to see the curvature here and the crossover events on the baselines. So this first sign of reversal after you saw some divergence spawned on the money flow here on the daily time frame, it triggered a stop loss hunt to the downside before they went back up, and it looks like we are now starting to see that come to fruition. Now it looks like, wait, the daily time frame stochastic is now getting overbought, giving you the thumbs down signal. However, we did close the daily candle above the cloud and attempting to hold it as support as of this current moment in time. So if we go into the daily time frame, that is currently a nice close that we saw before we went off air today. The momentum waves on the baselines here are still wide at a wide angle. You'd still need to close some beneath that on the daily time frame. We were talking about the 3-day. If I recall, the 5-day is coming to a close sooner than later. The 5-day did close bullish above the baseline, tilting this baseline up, starting to negate this cross down event we had for you back on April 16th. So are we starting to reclaim the baselines here on the 5-day time frame for a narrative structural shift to the upside? The momentum waves can suggest this on the 5-day time frame now, as we start to see the stochastic turn up and the money flow come beneath the price in this manner. This happened on the 3-day time frame, which was why we were looking for a long idea as we were coming down into the divergence of the liquidity pools here. We are seeing the double bottom on the Williams, the money flow coming beneath the RSI here, and we did come beneath the cloud, and then we now came back above the cloud here on the 3-day time frame. The money flow is still beneath the RSI, suggesting that in 9 hours 47 minutes the 3-day candle close could be a strong one on the 3-day time frame. Now if we go to the, so you have that 3-day 5-day support now, as you're oversold on the 5-day and the 3-day for the potential subtle support of the daily. So you see how the daily is overbought here on the stochastic RSI, and yet if it'll load, I'm too fast for it. Hopefully everything is good. All right, so if the daily looks overbought here, there's still the 3-day and the 5-day support, and the weekly is now oversold. So you have that weekly, 5-day, 3-day subtle support to keep this daily pinned, perhaps, as the Williams starts to come up here in a manner. Leading MACD also crossed over here on the daily time frame, so this is a good health to see. I think you had some BlackRock ETF open up for Bitcoin as well, so perhaps there's some liquidity from BlackRock entering the picture subtly without any as they take orders for that. If you look at the 22, we're getting this double top potential as the Williams starts to come up with its average here, and the money flow and RSI still coming up as well. If you look at the cloud on the 22, it's starting to curve in a manner similar to the daily in this fashion, suggesting that it continues to shift and possibly thin to another narrative. If we start to go to the 12-hour time frame, we are also starting to see, let's see, camo. The thinning of the 12-hour cloud in a better fashion than the 22, and you're starting to see this curvature as well as we broke through, came back, kissed it for support, and continued. We're putting out that idea of that pierce, kiss, retrace idea. It happens on all the time frames, and we'll get to the lower time frames as we approach. And you're starting to see this potentially, if it holds this, if it starts to close beneath this and candles closing beneath the baselines, you're getting into that cross down territory, and that's when you start to look at it in this manner where it could be bearish city. We're not quite there yet, so that's why I'm not necessarily in the short mode just yet. If we look at the 6-hour time frame, we could see 6 hours. 6 hour is starting to give you that cross down potential here on the 6-hour time frame. You did get a surge up, and now you're getting this Williams also came up to that zone where it's getting fatigue potential. So the 6-hour time frame is working against those higher time frames we just went over. So this is where you start to see the battle of the time frames, where you have this larger time frame subtle support while the lower time frames want to come down on you. So this medium time frame rather of the 6-hour. So the 12 and the 6-hour starting to get fatigued alongside the 4-hour here, and you're getting this cross down potential of the 6-hour time frame. Let's go look at the liquidity real quick, see what they're pinging into the charts alongside the momentum. So far, nothing noteworthy has entered as of the price change. Only a few 35 million here, and they're grabbing some little 100x characters here. Not really anything noteworthy like big bubbles like this. This is what we want to see, is some move where bubbles enter and start to create an imbalance, which suggests one side over the other like this, where they want to come down into it. As it stands right now, they're retracing into the 100x, which gives a catapult launch idea, potentially speaking, as they subtly do. So until this candle closes in 3 hours and 42 minutes, if it closes beneath this level at 26,773 or below, this will lock in the cross down event, which does bring with it a potential fury to the downside. So that is something to take note of if you do get candles closing beneath the baselines here. So it's all about the candle close. These could become wicks to the upside, which keep this path going strong. However, they are getting fatigued on that 6 hour time frame. Something to note, if we go into the 4 hour time frame, we're going to see that the 4 hours getting that cross down Williams potential, with the potential coming down of the stochastic RSI as well to the 50 level. Let's take a look at that. We had the cross down event get negated. We pointed out the bullish divergence on the hourly, which took us to the upside here to the target of the pool we had outlined for you. Pretty accurate, if I do say so myself. Are we going to continue higher to this pool and this fair value gap and the adaptive rejection at 27.4 or above? Currently, as it stands, we are crossed down on the on the baselines, and we could be continuing further unless you start to maintain this as support on the 4 hour time frame. 4 hour is also overbought with the 6 hour, so this is where you get the 4 and the 6 versus at 4, 6, 12 and 22 versus that possible subtle support of the daily. And then so you have to look to the lower time frames of the hourly and below to see what type of thing and structures are forming. You have the cross down event now occurring from where we laid it out for you earlier today. We're about pointing out here how we could come up to this pool and conservatively take out this, and we wicked off that. Now starting to see this cross down event of the hourly time frame starting to get this suppression. The money flow is coming beneath the RSI here, and you could see this come down some more here on the hourly time frame. The hourly time frame is potentially coming down into this cloud. The cloud is thick, but it is creating a potential double top M formation rejection off the Williams, the adaptive here, to come down into these liquidity zones. If we look down into here, the next area to look at 122 million is 26,486. 26,486 would put you down in this region at the bottom of these candles, also breaking the trend to the upside. Let's load it again and see what pings in. What's up, Nix? Low MIP, Smart Data, what's up? So nothing new pinged in just yet. Coming down possibly to that 122. Take out some of these 50x. Also, let's see what else is stacked up here. It's a little bit jumbled, so we can zoom in a little bit. Not really much. They took out all these guys in their wick whacking before, so this is the only pool target on the radar right now. 26,486 potentially speaking on that small dip down here as you take out these 100xers, which they love to do. If you dip into on the 1 minute time frame, you do have an imbalance of 13 billion in long liquidity, so they could come back into this, although this is constantly losing data to Father Time, which is why we juxtapose to the external pools, which show that pool up at 27,350. Just a reminder, let's do it again. On the 7-day time frame, the 7-day and the 1 month do show that pool potential to the upside at 27,350. So coming down into this to take out some of the 100Xers before they send it. That could be the potential thing happening here. If we disregard all the wick whacking of price and just do a retracement from lows to highs, you could come back into this 618 bounce potential here at 26, what is that, 637-ish? 26,637 would have you just below that 50x pool here. $26,685, $26,658, like just taking out that 50x pool. All right. So yeah, the cross down event on the hourly is something to not ignore at this time. So we're getting this potential suppression with the 4 hour and the 6 hour in effect on the hourly time frame, with the 15-minute. Why is it taking so long to load these? Do I have something else open here? Like, weird. All right, so on the 15-minute time frame, here we go. 15-minute time frame, cloud rejection here, possibly speaking, cross down event. Unless in 6 minutes 40 seconds, if you cannot get this cloud to come back, or this to turn into a wick above this cloud, then you're going to see this cross down event on the 15 occur, which could reset this Williams entirely. If we go to the cloud, though, the cloud is thinning in a manner here, suggesting that you do get some buyback pressure on this wick. We haven't seen any significant pools open. I think they're trying to ping the shorts to get more shorts to enter. They're pinging the interest to the shorts right here. Can they get the shorts to bite the lure is the question. So far, even Steven, no real interest generated just yet. Boom. So we got some people looking up. So the 15-minute is 15-minute, hourly, and 5-minute. We're getting those 3 time frames oversold right now. So it's the 5, 15, and 1 hour, potentially wanting to see some sort of bounce over the 4 hour and the 6 hour, 12:22. So the medium time frames. So you have the higher time frames calling for upside, the medium time frames asking to chill out, and the lower time frames getting a potential reset to an idea to the upside. This could also be a shoulder, head, and a shoulder to the downside. Your measured move would put you down in this region below. Got that bearish divergence on the 5-minute money flow here. So this is the London handoff, the handshake. If we go back and see where they did that before, you have this kind of drop down on the London close time. They do some liquidity grab and boom, they sent it to the upside here. So is this a similar stop hunt to the downside before they rise it? Normally the first move could be the one to bring it down before they bring it up. If you go back to another London close here, they brought it up to bring it down. Here they brought it down to bring it up ever so slightly. So this is why we use this nice indicator here. This is the London kill zone event. So let's see who is being pinged in. Coming down to 26,688, taking out all of the 100x. All right. And we'll also, for good measure, go over the NASDAQ for a little bit while we wait for stuff to occur. Let's go into the NASDAQ futures and show you how that operates. Oof, that's a nice rise up to drop it. That's probably why things are dropping as we speak. So we caught this nice little move to the upside. We saw this continuation bounce idea earlier before we went live, and we were talking about this potential, whoops, where was it? We were talking about it here. We got this little rise up banger to the upside here. Just took it for what it was worth and moved on. So it looks like it's coming back down to the potential bottom of this range idea. So let's go look at the DXY. DXY is pumping right now. This is what's causing everything to bleed. Looks like the whole market is red and the DXY is pumping it. Why is my computer so, the connection, spotty? Is it recording? Wait, oh no, that's because it's streaming. I hope the connection's alright. Alright, so we're basically reclaiming some trend-based fib levels here at the 1382 of the bearish trend-based fib to negate that, to potentially come up to the 1 level here, reclaiming some of the vectors here as we get overbought on the 4, 1 hour, 15 and 5 minute on the US dollar index. So if we come up into these vectors here, are we starting to see some sort of vector recovery idea for the dollar as it's starting to retrace the market? So the entire market is red as we speak. Wait, why is everything acting so strange? Let's wait. Hold up. Give me a second here. There we go. Yeah, my chart was acting weird. It's odd. Okay. So it looks like we're coming back down into the 618 region. Let's go see what type of liquidity we're coming to grab now. So the nearest pool right now is the 26486 region. There's some shorts being pinged into the battlefield now. If we look here, you're seeing some $45 million characters. Not really that much by comparison. Certain times in the past we had, obviously during this drop here, you had, this was on Monday, which had no market open, and you had all of these gung-ho characters opening up $166 million orders as we went down into this region, which are still open, mind you. So these shorts could be targets in the future, and they came back and grabbed these longs to immediately to not have to pay them. So as they come back down into these regions, if we put this entire range in a juxtaposable view, if you come down to this region, you essentially allow all of these traders that are in the ones above anyway. Let's make sure we get those guys as well in the viewpoint. Let's get out of here. Come on. Thank you. Come on. If it'll let me select it. It's acting really laggy for some reason. Okay, so you basically have some $166 million character up here at 27,549, still in a trade from when they opened it in this red candle here. So this character is still currently at a loss in drawdown, even though they're coming back to their entry in essence, considering to come get this guy at and liquidate them. So would they come back to get this $122 million character and allow this guy to get paid from yesterday who's still open? Or are they going to ping more liquidity in shorts while they take out as many longs as they can before spawning some divergence to come back up to this guy and hit those pools on the 7-day as we were talking about? That's basically what I'm thinking about as I see these different pools, is who are they allowing to get out while they aim at somebody else. And so this 122 doesn't look as juicy as that guy we saw at 166 million. And there's more smaller pools, yes, here, but basically overall on the larger time frame of the 7-day, you still have some pools up above here at 27.3 that you could come get, which are lost to father time, which we don't see here on this 1 minute time frame. So you're going to see this imbalance on the 1 minute, but it's not always the case without looking at the external pools. So we're coming to the cloud. We currently wicked off the cloud. And did you go all the way down to the 618? Not just quite yet. We went down to the 1 level of the bearish trend base fib level yet again. If we go to that 6-hour time frame to show you this 26,651 region we've seen a lot of action at. This is also the weighted moving average on that time frame. So that 15-minute must have closed in a bearish state, which locked in that cross down event. So basically that cross down event is in play for the 15-minute until it's not. The kill zone was the stop hunt to the downside, and where is it going to lead? Is it going to lead to the upside play, stab up to this region and try to take out this pool? I'm welcome to take a look at some assets if you're interested in seeing what they look like. Please shout out in the chat. I'm happy to give it a whirl. The money flow on the hourly is significantly beneath the RSI, which could come back up to test it here. You are getting that potential suppression idea with the baselines crossed down, not in your favor for longing at this time. Getting that rejection off the adaptive moving average, not exactly the best state for a long idea. But seeing that you held this range while essentially going sideways all day while resetting the stochastic in this manner, it could be a short-lived dumperoo to bounce off the 618 retracement zone /50 level of the Williams. This is your standard break through the cloud bounce. You did come through the cloud here as it thinned, and yeah, coming back to retest support is a normal thing to do. Still not seeing the liquidity enters just yet, so not really seeing a clear picture on pinged shorts or longs just yet. You are seeing more shorts enter than longs here if we just look at the immediate what's happening. So you're starting to see 45 million as opposed to 27 million, 19 million, 24 million. So ever so slight imbalance to shorts to longs as we drop down out of this range, but still nothing noteworthy. If you're wondering what you can use that's free, I've gone over it before, but basically the liquidation levels by ML applications, I recommend going to the 15-minute time frame and below for that idea, and going to ML applications liquidation levels. You can pause it at this point and then look at the threshold, make it 0.1 for every 100k trader, and then it will load all of those characters, and you can see where different imbalances stack on 100x, for example, and then they come back and they gobble up those 100xers. And if you see an imbalance on that, you can check it out. That's the free version of High Block. So as it stands right now, we have yet to see the divergence play out. Another 6 minutes for this candle to close. I'm willing to take a look. What's up, Crypto Method Man? How you doing? So the 15-minute cloud is not as strong as the other time frames, so you see this meandering around sometimes, but the thinning does eventually bring you some glory if you catch it at the right juxtaposed time frame with others. So we're starting to see this curvature in this manner. I'm still seeing that the upside play on the 7-day and the monthly is where we're headed, and this is just a fake out. Who knows what other bigger stories are at play, whether there's news stuff going on or not. You're seeing this retrace into the fair value gap for the dollar. Potential rejection off of these weighted and adaptive moving averages. And if you look at the S&P, starting to see a rejection with the gap down. They could just be stopped rising down before they go and close the gap at some point. NQ also trapping a lot of people who went long here. Significant volume on those two red candles. So it's essentially the same thing. You're getting like these ABC retracement waves to the downside. And if you were looking for this long idea to see it come up, then you'd basically try to see this bounce off the golden pocket of this retrace or not. Does it spawn divergence on this hourly time frame? You do have the 4-hour cross down now starting to probably rear its ugly head again. You had it back here, and was this an extended M before we come down some more? 6-hour time frame also in a bearish state. You do have that pool of that character down here, but you do have this entire trend and cloud to negate. And the daily time frame and the 3-day and the 5-day closing out nicely. Is there something to that idea? Once again, 3 hours and 18 minutes for this cross down event on the 6 hour to be confirmed or not. This would be alerting your phone, by the way. If you have Momentum Master A, you can always add an alert to the time frame you like and get these crossover, cross under events for the leading moving average formula. And when they occur, I believe it happens as it occurs. You can say once per bar or once per close. It's up to you if you want it to be when it closes or not. For example, you would have gotten this as it closed in that manner here on Monday, June 19th, and then it would have dumped at least a 1.5%, which you could have capitalized on at that time. Same with the hourly, although that doesn't give you the same, it gave you the impression that occurred later. So the liquidity doesn't really suggest, I mean, you come down to that 2648 region, you let out that character, all those characters that entered in here. I'd like to see more liquidity enter the charts. It doesn't seem like there's any interest being generated on either side. Definitely less longs than shorts. They're not really going into anything noteworthy that I can see, unless they're aiming at this. It looks like it's a kind of inducement of some nature. They did take out these characters, so rip to them. Fatality! I wish I had my sound effects. We'll figure it out after the live. Do you guys have anything you want me to look at? All right, well, I guess not. There's only one still viewing. So I thank you for coming on in. We're gonna see if it bounces off here in the next 15 minutes or not. We'll chill out alongside you. I'll just be doing some other stuff. Let's go into, we'll come back to that. We're gonna go into total and give total a little look. Let's see how total is behaving. Got the same hourly thing going on. Let's look at the daily. Daily getting a cross up event. We have yet to reclaim the cloud, which is slow bleed out of crypto, just volume leaving, volume leaving, volume leaving, no shift in sight, no angle to insinuate like Bitcoin is doing. If we switch to the total three, which is everything altcoin without Bitcoin or Ethereum, you're not seeing any interest generated in the alt so much, barely getting any interest at all. If you look at the total, it's basically all ETH and Bitcoin. And if we go to the Bitcoin dominance, it should also show that occurring. We did suggest that you would be coming up into that 50 range on the before we even got there last week, saying that the angles in which these were going was in showing that the Bitcoin dominance was going to continue. And then we looked at the USDT dominance and saying this was going to come down as more people wanted to move off from alts into potentially going into Bitcoin. So you're seeing this cross down event on the USDT dominance, which means people are getting, also there was an attack on Tether, so that also seems to be why people are moving away from USDT as well. So moving into possibly stabilizing their USDT into Bitcoin. And so as they enter trades, then this means if you have this down and this up, this means that Bitcoin is going to go up. So we were potentially seeing this occur before it occurred. We had these out back then around Sunday, June 11th, about 9 days ago. So if we look at the total, We are getting the cross-up event on total, which could see something occur. Not really seeing much volume shift potential on the daily time frame cloud just yet. You are at that indecision point, that midway point of the descending channel here. We have yet to reclaim any interesting support. We're just in the golden pocket region of this bearish trend based fib level. Are we starting to see a shoulder, head, and shoulder? We'd have to see some significant move up into these regions above the cloud for anything noteworthy to occur. With total, if it would need to have some sort of surge of massive volume, billions of dollars entering for whatever reason. Otherwise, this is also just one bottom, so you could be having like this double bottom event occur as well. If you fail the first rally, you come back down and have some capitulation thing before you come back out. We got 9, is that 9 hours? No, that's 9. Can't be 9 days. 9 hours, right? Yeah, 9 hours for the 3-day candle close, which is an indecision doji. You are starting to see a possible reclamation, digging your way out of this baseline suppression that was occurring back from April 16th. Same as Bitcoin, attempting to come back up out of this total 5-day idea. When you start to juxtapose it to where we were, we had that rocket ship at the bottom for you. I remember when that occurred and we got out. Looks like we wicked off of the cloud on the weekly time frame. That's interesting to note. Are we starting to see a weekly potential shift? You do have a lot of suppression to, you have this weekly cross down event that we are dealing with, and until you can get above that, that's just acting as resistance up at this one level at 1.05 trillion. Let's measure that bull hammer objectively speaking, shall we? So we take this from wick to wick. It is above the 382, so this is an objective bull hammer on the weekly that closed for total. So is this going to be a surge up on the weekly time frame? Also getting that cross down potential on the total, not really seeing so much volume enter here on this surge up too. The shift is not massive just yet. Could be just a stop hunt before continuing down further. And let's go back to BTC. We'll close out the candle for you and see how the hourly closes. Hey, what's up, Spragadocious? So seeing a lot of this wick-wacky action on that London close, people closing out positions. So essentially from London to here, you didn't really go anywhere. We're basically back to where we were at the London start zone, slightly above. So the 15-minute has reset alongside the hourly here. So you got those two time frames oversold, similar to what we had back here, which gave us a little bit of a boost. So you could be getting that coming up here as we close out, getting that 5-minute cross with the baselines closing beneath the price, so you can take it for what it's worth here on the 5-minute time frame. We did bounce to a T from that bearish trend-based fib level. Are we going to hold it, or is this just another leg to come down into the golden pocket? You can take these for what they're worth. This is what they give when you play them properly. They can give you those percent plays. So it did not close this 2 on the 15 time frame. It got bought back before it had time to close. We can go over how that the stochastic array formula operates, shall we, for the last bit of it. So the stochastic array is a candle close specific formula. It gives leading information as it closes in that time frame. So within this 15-minute candle close, the 15 and the 5 did get oversold, as well as the hourly, but it didn't have time to close this 15-minute candle with those ideas intact. But if you go to lower time frames, it did do that on this candle here. So you can see that this elasticity of this rebound was showing you that there were 2 time frames oversold, which you would have gotten a dynamic alert to your phone telling you that there's these 3 time frames oversold right here about 20 minutes ago or something. Yeah, 25, 10, 15, 20, 25 minutes ago, you would have gotten that 2 alerts to your phone and seen what to do. Just like we showed with the earlier today, we had this nuke appear and got these oversold ideas here. We had the 7 time frames overbought this morning just as we started to dip down out of that region, which was here. So you would have gotten that alert to your phone right as it started to peel out from the Asian session. And we went over how that Asia likes to pump it before they fade it into London, and sure enough, they pumped it and faded it into London, and then we saw that surge up into New York. So are we going to continue higher? We're getting the cross-up event on the 5-minute holding here, potentially speaking on the 5-minute here, starting to close. Then you start to just take it for what it's worth on each time frame as they play themselves to fruition. They did ping some 100x after clearing the 100x longs. They pinged some 100x shorts, so you do have some 100x shorts here, here, and here for them to come back to. They did create a path to come back to them, however slight. You did lock that 5-minute crossover event intact. It could just trigger a double bottom for that to come up out of. Normally when you get the cross-up event, it does meander before coming back out, so it does give you that idea here on the 5-minute. Once again, the 15 is not in your favor as it's crossing down now, so you have to see this battle to negate this as a dud or not. There are duds that occur on these lower time frames, but definitely are not to be ignored, because when you get these 0.75% and you capitalize on them as a scalper, or 2-3%, this is why these baselines are a scalper's dream. All right, 4 more minutes and then we will bid you adieu. I just want to see how the hourly close on this looks in terms of the momentum. You're getting a huge buyback wick here on the hourly time frame, which is looking juicy for continuation potential. despite having the ambiguousness of this cross down event working against you. So you do have the 15 and the hourly now working against you in terms of a long idea. If you're in a short, then you have the hourly, the 15, the 4 hour, the 6 hour, the 12 hour, the 22 hour, all looking for potential fatigue here. I'm just looking at liquidity in conjunction with this to see a potential jump to a higher zone before we exhaust completely. Two minutes for that hourly close. And it looks like you're closing beneath the baselines, which is keeping this on the path to the golden pocket intact, despite giving this buyback wick on the cloud. So you just need to look at the oscillators and what the baselines are telling you, and it's just saying there's more downside in store as of this moment in time. On the hourly, 15-minute is looking for that bearish retest to come down on the 15 perhaps. Still waiting to see some liquidity pinged in. Still nothing noteworthy. If you just go solely off of the 1 minute time frame, you do have 12 billion in long liquidity just waiting for the taking down to that 25,777 region, which we had outlined the previous day before down in this region here, the 25,777 region. However, we have shown some strength to go higher, which is why I'm vying at that external liquidity pool of that 7-day time frame. It leads me to believe that we are going to at least grab this little bit of happiness up here at 27,350 zone first. So whatever it's doing here is just leading the way to this, in my humble opinion. So I'm sticking to my guns on that idea just based off of the liquidity. The momentum is telling me it's still going down though, so the momentum doesn't currently coincide with this idea of going up to the 28.1 region, or conservatively 27.3. I'm still kind of a student of the ABC stuff. Looks like we closed the hourly time frame. Let's see what it did. It reset completely down to the 3 level. All right, ladies and gents, it did starting to curve on this hourly cloud. Is this hourly cloud going to take us to the upside? Are we going to see some love off of the bounce here and the buyback wick on the hourly time frame and negate this cross down event on the hourly and the 4 hour, the 6 hour? Once again, you have to look in 3 hours time. How does the 6 hour candle close? Is this indecision doji on the 6 hour going to start to negate itself? If it starts to come up above this point and negate this cross down event, you could see that that higher time frames suppression of the 4 hour reset and bring this to the upside if it does maintain this level. If you start to come down and start closing candles beneath this zone, then this cross down is complete and you'll start to be seeing this shoulder, head and shoulder to the downside in this region here. We are on an unusual time frame. It is Wednesday. Yesterday was technically false move Monday, quote unquote. So this is the first actual trading day back since the holiday. So is this going to be a false move before we come back down? Actually, it is Tuesday, technically the first day still going for the New York market. So this is the figuring out where the liquidity is for the week. So this could be the false move day. So it's basically you're getting Monday on a Tuesday. Shoulder, head, and shoulder potentially speaking. 4-hour cross down, 6-hour cross down. So ultimately you got to take the signal that speaks to you the most. For me, I'm juxtaposing the liquidity in conjunction with this. That was a really smooth play up to here though. I gotta say that was awesome. So I'm going to delete this now. It's in the past. Goodbye. So are we going to come back up into this region and start to take out some of these other vector candles from before? The hourly cloud balance with the thickness of this cloud on the hourly, to me, suggests that you could see that continuation idea in conjunction with that reset. You got that reset on the hourly going sideways. This is, you know, what I look for in terms of that kind of hidden bullish divergence idea of the momentum. So are you starting to see this play out here, bounce off the cloud continuation? It does happen on lower time frames a lot. So that's what we are hoping to see. And that's my story, and I'm sticking to it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, and all that fun stuff. And we will catch you on the flip side.